going on, guys? In this video, we're going to be reviewing one of my favorite stocks, PayPal. In this video, we're going to go over if it is a good investment. Obviously, it was a great investment for me about 3 years ago, but is it still a good investment? Before we even get into any of that, we need to go over some of the history. For those of you who don't know what PayPal is, or at least where it came from, it was a subsidiary of eBay. It was pretty much the first method of paying online. And eBay was really big back then, rewind back to 2000, right? When Amazon really wasn't anything yet. And the internet was still in its infancy and people really didn't trust it. So you'd go onto shady websites like eBay and you would bid on random stuff with other people. And how they do this, they couldn't just take out their wallet and give money. It was a group of people, Elon Musk being one of them, who founded the company PayPal. And it was, again, a subsidiary of eBay. Back in 2015, eBay decided to sell off its PayPal shares to its shareholders in eBay, and it became its own company, and it has only gotten bigger and bigger over the course of the last couple of years. But anyone could learn that just from a simple Wikipedia search. Could give you all of the information that you want to see. Let's dive into the fundamentals and other fun stuff like that on Seeking Alpha. So here's just the overview of PayPal. Right now, it is $200. It has had an amazing year. You rewind a year ago, it was only $104. It's up 83% in 1 year. In 5 years, it's up 441%. But is this like every other tech stock that's just exploding and inevitably will eventually crash and burn? Well, that's why you clicked on this video, and we're going to find that out. But before we figure that out, make sure to smash that like button, subscribe if you haven't already, and if you have any comments, drop them below. Anything related to PayPal or not related to PayPal, whatever it might be. But let's get back to the video. So before we even dive into the fundamentals or any of that, let's jump over to TradingView. I bought PayPal 4 times on 4 occasions. One of them was back in around September, October of 2017. Then I think May of 18. And then again, I think up here at a top. And then it was chopping around. I thought, let's buy the dip. So somewhere down here. And I haven't bought anything in all of 2020, but I've held on to my shares for the past 3 years. And you might be thinking, okay, well, what prompted you to buy PayPal? What kind of expert advice did you have? I didn't have any expert advice. It was one of the very first stocks that I bought. I had no clue what I was doing. I just always remember listening to my parents, who own a couple of businesses, complain about PayPal is so expensive. We pay so much money to PayPal. And I always ask them, why don't you change to someone else? They said, because PayPal is the only one out there. So I thought, sounds like they're cornering the market and they're probably making a lot of money off my parents. They're making a hell of a lot more money off of bigger companies as well. Maybe it could be a good investment. And well, it has been. But I started to look into the fundamentals, learn about the company, and I realized, wow, this is actually a really good investment that I made without even realizing it. We're gonna jump back over to Seeking Alpha, and let's just go into the financials first, right? Before we even talk about the sentiment of the company or what it does, we're gonna look at the financials. We don't even need to look further back than 2015 because that's when its public offering was. So we don't really need to look at the financials in 2014, 13, or 2012. But you can see, obviously right off the bat, revenue has been going up. That's what you want to see in any company, especially a new company. The gross profit, same deal. But let's look at some of the more important stuff. Research and development has been going up because they are a growing company. So you're going to expect that as well. If we scroll down, their interest expense is going in the negative direction, and that's because they're taking on more debt. Again, they are a growing company, so I'm not too worried about that. But we're going to get into some of the more important things like earnings before tax, right? This is what's more important to me than net income. And even more important is free cash flow, but we'll get to that. But you can see over the past 5 years, they've been steadily increasing. They have pretty much, they're not there yet. They've almost doubled their earnings before tax within 5 years. If we look, if we include the unusual items, it's pretty much the same deal. There's really no difference, whatever that is. Sounds pretty shady, but whatever. Net income, we will look at that, and you could see, again, upward trend. That is all good, what you want to see anyways. But now let's get into the more important stuff, like earnings before tax depreciation amortization. This is very important. We went from $2 billion to about $3.4 billion over the past 5 years. Again, everything you want to see. Your earnings per share. This is a great trend. It has gone up over 100% in 5 years. This is something as an investor you want to see. And if we keep going down, this pretty much excludes everything that I look at least in the income statement. But we're just gonna jump over to the cash flow statement really quick. And if we look here, I think this is even more important. You wanna know where the money's going, how is it coming in, and how is it going out. And the first thing that I like to look for is your free cash flow. I think this is super important, looking at free cash flow. It is one of the top things that I look at, along with, maybe a handful of other stuff. I probably have a video out there where I explain all that. Search around my channel, but I think free cash flow is so important, because at the end of the day, you ask any accountant to give you your financial statements for your business, their goal is going to try to minimize the income that you take in. They want to make it look like you're making as little money as possible so you don't have to pay more taxes. If they're not doing that, they're a bad accountant. You should really get a new one. But free cash flow says it all. That's when you bring back in depreciation expense and all of these other expenses that you would have otherwise written off. You want to see how much money are they actually left with at the end of the day. What is sitting in their bank account that they have to either pay their shareholders or reinvest back into the company. And you could see, PayPal has been very responsible. It's a new company, but it has been able to maintain a decent amount of free cash flow over the past 5 years. And you might be thinking, well, this only shows to 2019. What's happening in 2020? They're really benefiting from the coronavirus. Back in, I believe, May, they actually had their record-breaking, it was either a month or a quarter, the most revenue they've ever made, because a lot of people are now buying online because they're scared to go out into the stores. So the alternative is buy online, and you're gonna have to either use your Visa card, MasterCard, or you're gonna have to use PayPal. And not only that, but people are also using Venmo. If you have a phone, you probably have Venmo, and that's been really great with the younger generations at restaurants. And yes, PayPal owns Venmo, so that's another thing. But we're getting into the sentiment. I want to continue with the financials really quick and a couple of ratios. There's other stuff you could look at. Another big thing is long-term debt, but we know they're going to be adding debt. So we know total debt is going to be going up. That is fine. And repurchase of common stock, this is actually pretty interesting. They went public in 2015, and they're already repurchasing their stocks. It looks like they're repurchasing more than they're issuing. So that's an amazing sign, at least in my eyes, even though it's a very new company. They were able to release all these stock, and they're already buying them back. That's probably why I have over 100% return in 3 years. Okay, so now with the financial statements, we can go into the balance sheets. I will admit, I do not look at the balance sheets as much as I should, but I'm pretty sure everything here checks out what you want to see in a company. But more importantly to me, we're gonna go to overview and we're gonna look at some ratios. So I think ratios are very important too. And if we go down the line, yes, the PE ratio is very high, 90. The PE ratio is 90, which I know that's not a great number. You'll hear people, value investors will say they want to find something between 10 and 15. 15 would be a little on the high side, but this is more of a tech stock, or at least FinTech, and it is a very new stock, so people are thinking its value is going to continue to, double or triple over the next couple of years, which I'm one of those believers as well. I think it will continue to go up. So I'm okay with a really high PE ratio. And hey, it's not as high as some other companies. There's some tech companies where their PE ratios are 200, 300, 400. Like it's insane. So it being 90, it's high. Yes, I know, I get that, but it's not the biggest concern to me. But more important, and one thing that I want to see with a new company is their total debt to equity. So think of when you get your credit score, right? And you're brand new, maybe you're just in college, just out of college, you get your first credit card, your credit score is like a 620 and they give you a credit limit of 300. You're like, what am I gonna do with 300? $300 of credit limit, you know what I'm saying. It's just like that with a new company. You don't want a new company that went public and a lot of people bought into it and they think, wow, we're the best. And they take on a lot of debt and they have 300% of their debt to equity and they're very over leveraged. You don't want that. PayPal is being very responsible. 54%. This is something that Warren Buffett would look at. He would look at numbers around 54%. People will argue saying he looks at anything below 50, but his biggest position is Apple, and that's like 200% with their debt to equity. So I don't want to hear it. 54% is a very good number. They are not carrying a lot of debt at all. Their current ratio is 1.38. I really don't look at that too much. I know I should. But my big thing is the debt to equity. I think that is huge. If we look at its profit margins, 44% is good. Its return on assets is good. Return on equity is good. Pretty much, I just want to see all of this being positive. None of it's negative. It's not a speculative stock. Its financials are very fundamentally sound, in my opinion. I think a lot of other people would agree with me on that. So let's just look. We'll snoop around a little bit more of Seeking Alpha, and you could see that, you know, their earnings per share has been going in an upward trend, and they have beaten it most of the times over these past couple of quarters. You can see second quarter, this was a monster win. When people were hurting because of the coronavirus, PayPal was making bank. So if we jump over to dividends, obviously they are not a dividend stock, and I wouldn't like if they were. They are too new of a company to be dividends. They need to keep growing and grow their profit, grow their revenue, and really just take on more of a market share before they get into dividends. I mean, yeah, PayPal is a great company. It's this new FinTech company that's doing really well, but it's minuscule compared to, you look at some big banks, right? It's just starting out. It still has a long journey, so a long growth period as well. As my opinion, I'd like for them to pay out dividends maybe 20 years from now. So I'm not too worried about that. I guarantee it's going to have an awful rating for a value stock because it is not a value stock. Growth stock, on the other hand, B+. I would give it more of an A-, but I guess people at Seeking Alpha know better than me. And then profitability. I know I don't have the premium version right now. I was debating on buying it, but we'll see how this video goes. If a lot of people watch this and like it and subscribe, then I'll pay the $20 a month to have the premium version of Seeking Alpha, which I do have a video on that, so you can check that out. It is a great tool to use, both free and premium. But if you guys like how I'm reviewing individual stocks like this, I'll buy the premium version just for you guys so I can review more stocks. But let's get back to it. This pretty much sums up looking at Seeking Alpha. I can look at technical analysis of the stock, but that's really just good for seeing how it's done in the past. And it has been doing really well. If we go to the weekly, not the weekly, we go to the daily over the past year, if we at least look at that. I mean, 2020, they started at around $112. They went down when everyone else initially went down, but they've been having a beautiful ride up. They did hit a couple of supports. I think we're going to see it maybe trail down to 184 again by November. And then I think we are off to the races in December and January. And I wouldn't be surprised by the new year if we hit at least 220. I think that's very reasonable for that. That's my short-term analysis of it. But, you know, we don't know what could happen. But long-term, I think this is a great company to invest in. You really got to think, why is it such a good company? Well, it's money, right? And it's not like they need to have all of this overhead to create their product. It's just more of like this storage facility, this virtual storage facility for us to transfer our money into it and then transfer it to, if we go to maybe a restaurant and we're using Venmo between our friends, or all of the businesses using PayPal, not just nationally, but internationally. PayPal is massive when it comes to small businesses. Some small businesses only use PayPal and nothing else. My family's business is one of those, and that's why I was first attracted to this stock, because I saw my family is working their asses off, making a reputable living, and they have to pay PayPal, whatever it is, 3.5% for every single transaction that we're making. So PayPal is just making money off of us making money. And they're doing it not only to us, but every other company. Just the business model in general for PayPal, I think is amazing, and it has that reputability. Everyone feels very safe using PayPal. It's very reputable. There's not a lot of breaches that you see with PayPal. So that's my sentiment analysis. I think it is an absolute amazing company, and the fundamentals just show that. So you might think this is biased, but yeah, I am a huge advocate for PayPal. One of my favorite stocks I invest in. I'm not a financial advisor. This is completely opinion, but you guys already knew that. So, not financial advice. I don't need to protect myself. I don't have any kind of Series 7 license or whatever they're called. But that is my analysis. PayPal will continue to go up in my mind. I will continue to buy it. I am long PayPal. It's about 20% of my portfolio right now. I haven't bought PayPal in about a year, but I have never sold a single share that I bought. I've been investing in it for 3 years. But I want to pass it off to you guys now. What are your thoughts on PayPal? Do you want to invest in it? Have you invested in it? Do you think it's a good or bad buy? Drop those comments below and make sure to smash that like button if you haven't already. And again, subscribe. I'll keep coming out with videos like this if you liked it. But as always, guys, I will see you in the next one.